In this video, we'll be sharing 10 proven strategies that can help you take control of your student debt and start working towards a debt-free future. So whether you're just starting to pay off your student loans or you've been struggling for a while, this video is for you. Let's get started on the journey towards a debt-free future together. Strategy 1. Understand your loans. It's a no-brainer, right? But you'd be surprised how many people don't fully understand the details of their student loans. It's like driving a car without knowing how to read the gas gauge. You're just hoping for the best. But don't worry, we're here to help you get a handle on your loans. The first step is to gather all the information you have about your loans, including interest rates, payment terms, and total amount. It's like doing a puzzle. Once you have all the pieces, the picture becomes clearer. Once you have all that information, it's time to organize it in a way that makes sense to you. Some people prefer to use spreadsheets, while others prefer to keep a physical file. The key is to find a method that works for you and stick to it. This will make it easier for you to keep track of your loans and make sure you're on top of your payments. Now that you understand your loans, you can start to think about how to pay them off. It's like having a map. You know where you are and where you want to go. Now it's time to plan the route. By understanding your loans, you'll be able to make more informed decisions about how to manage and pay them off. Strategy 2. Prioritize high-interest loans. Picture this. You're sitting at a poker table and you have a few cards in your hand. Some are high-value cards, while others are low-value cards. Which ones would you play first? The same concept applies to your student loans. Some loans have high interest rates, while others have low interest rates. It's important to prioritize the high-interest loans first, just like playing your high-value cards. Why? Because the high-interest loans will cost you more money in the long run. Imagine paying off a high-interest loan as quickly as possible is like cutting off the head of a weed. It won't grow back and cause you more trouble. By tackling these loans first, you'll save money on interest and be able to pay them off faster. On the other hand, low-interest loans can be handled with a more relaxed approach, like a weed that you can pull out slowly with a root. So, take a look at your loans and see which ones have the highest interest rates. Make a plan to pay those off first and then move on to the lower interest loans. It's like a game of Tetris. You want to stack the blocks in a way that is most efficient, and this is the way to stack your loans. Strategy 3. Consider consolidation. Imagine having a bunch of different credit cards and each one has a different interest rate, due date, and payment amount. Now imagine consolidating all of those credit cards into one with a lower interest rate and a single payment. Doesn't that sound like a dream come true? Well, the same concept applies to student loans. Consolidation allows you to combine multiple student loans into one, with a single interest rate and payment. It's like having a personal assistant to take care of all your bills, one less thing to worry about. Not only does consolidation simplify your loan payments, but it can also lower your interest rate, which can save you money in the long run. It's like getting a raise, but instead of more money, you get more time to pay off your debt. However, consolidation isn't for everyone, and it's important to weigh the pros and cons before making a decision. It's like trying on a new pair of shoes. It might look good, but it might not be comfortable for your feet. Consult with a financial advisor or loan servicer to see if consolidation is a good option for you. You can also use online calculators to help you compare the potential savings from consolidation. It's like trying on a pair of shoes. You need to make sure it's the right fit for you. Strategy 4. Refinance your loans. Imagine you bought a house and a few years later, interest rates drop. You have the opportunity to refinance your mortgage and get a lower interest rate, which can save you thousands of dollars over the life of the loan. The same concept applies to student loans. Refinancing allows you to get a new loan with a lower interest rate, which can save you money on interest and help you pay off your debt faster. It's like upgrading your phone. You'll get more features and better performance. When you refinance your student loans, you may also have the option to extend the loan term, which can lower your monthly payments. It's like having a personal trainer. You'll get the results you want, but with a less intense workout. However, it's important to keep in mind that extending the loan term will result in paying more interest over the life of the loan. It's like taking a loan to buy a fancy car. You'll have a nice ride, but in the long term, it will cost you more. Strategy 5. Take advantage of income-driven repayment plans. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Imagine you've just landed a new job and your income has increased. With more money coming in, you want to make sure your student loan payments are manageable and aligned with your new income. That's where income-driven repayment plans come in. These plans are designed to make your student loan payments more manageable by basing the payments on your income and family size. It's like having a flexible schedule. You can adjust it according to your needs. When you enroll in an income-driven repayment plan, your monthly payments will be a percentage of your income. As your income changes, so will your payments. It's like having a chameleon as a friend. It adapts to its surroundings. One of the benefits of income-driven repayment plans is that they can lower your monthly payments and help you avoid defaulting on your loans. It's like having a safety net. You'll be protected in case things don't go as planned. Another benefit is that some plans forgive any remaining loan balance after a certain number of payments. It's like having a magic wand that erases your debt. It's important to keep in mind that enrolling in an income-driven repayment plan can result in paying more interest over the life of the loan. It's like ordering a meal with extra sauce. It might taste better, but it will cost you more. It's important to do your research and compare the different income-driven repayment plans to find the one that works best for you. It's like trying on different clothes. You need to find the perfect fit for you. Income-driven repayment plans can be a great option for managing and paying off student debt, but it's important to do your research and make an informed decision. Strategy 6. Apply for loan forgiveness. Imagine winning the lottery. You'd be free from financial worries and able to live a debt-free life. Well, loan forgiveness is like winning the lottery for your student loans. Loan forgiveness programs are designed to help certain individuals and groups of people who meet certain qualifications to have their student loans forgiven. It's like a golden ticket. It opens doors to a debt-free life. For example, some loan forgiveness programs are specifically for teachers, nurses, and other public service employees. It's like a VIP pass. It grants you special access. Another example is the Public Service Loan Forgiveness (LSELF) program, which forgives the remaining loan balance for borrowers who have made 120 qualifying payments while working in public service. It's like a loyalty program. The more you participate, the better the reward. It's important to keep in mind that loan forgiveness programs can be complex and have specific qualifications that must be met. It's like a scavenger hunt. You need to find the right clues and follow the instructions to claim the prize. Strategy 7. Look into private loan refinancing. Imagine you're at a crossroads in your life and you need to make a change. The same goes for your student loans. Sometimes they need a makeover. Private loan refinancing is when you take out a new loan to pay off one or more existing loans. It's like a renovation. You're updating and improving your loans. When you refinance your student loans with a private lender, you may be able to get a lower interest rate, which can save you money on interest over the life of the loan. It's like a sale. You're getting a better deal. You may also be able to choose a new repayment term, which can lower your monthly payments. It's like a custom-made suit. You're getting something tailored to your needs. It's important to keep in mind that private loan refinancing may not be right for everyone, and it's important to compare the terms and fees of different lenders. It's like a menu. You need to choose the best option for you. Also, if you're thinking of refinancing your federal student loans with a private lender, keep in mind that you'll lose certain benefits that come with federal loans, such as access to income-driven repayment plans and loan forgiveness program. It's like a trade-off. You're giving up something to gain something else. Strategy 8. Use extra money to pay off loans. Imagine you're on a treasure hunt and you just found a hidden stash of cash. Well, using extra money to pay off student loans is like finding treasure. Whenever you come into some extra money, whether it's from a bonus at work, a tax refund, or a gift, consider using it to pay off your student loans. It's like a windfall. You're taking advantage of a sudden influx of cash. Paying off a little extra each month can make a big difference over time. It's like compound interest. The more you invest, the greater the return. For example, if you have a loan with a balance of $10,000 and an interest rate of 6%, paying an extra $100 a month can save you over $2,000 in interest and shave almost 2 years off the repayment term. It's like a bargain. You're getting more for your money. It's also important to keep in mind that paying off loans early can save you money on interest over the life of the loan, but make sure to check if there are any prepayment penalties. It's like a trap. You need to watch out for hidden costs. Strategy 9. Create a budget. Imagine you're on a road trip and you need to plan your route. That's what a budget does for your finances. A budget is a plan for how you will spend your money. It's like a map. It helps you navigate your finances and reach your destination. Creating a budget can help you see where your money is going, identify areas where you may be overspending, and make adjustments to free up more money to put towards your student loans. It's like a compass. It guides you in the right direction. When creating a budget, start by listing all of your income and expenses. It's like a checklist. You need to know what you have and what you need. Next, assign categories to your expenses, such as housing, transportation, and entertainment. It's like a legend. It helps you understand what each item represents. Then, compare your income and expenses to see if you have a surplus or deficit. It's like a graph. It shows you how you're doing. If you find that you're spending more than you're earning, you may need to make some adjustments. It's like a detour. You need to take a different route. You can reduce expenses by cutting back on discretionary spending, such as dining out or entertainment, and increasing your income by taking on a part-time job or freelancing. It's like a shortcut. You're finding a faster way to reach your destination. Strategy 10. Seek assistance from a financial advisor. Imagine you're on a hike and you come across a tricky path. That's when you call in a guide. A financial advisor can be a guide for your finances, helping you navigate the complex landscape of student loan repayment. They can provide you with personalized advice and strategies to help you pay off your loans faster and save money on interest. It's like a trailblazer. They know the best routes to take. When working with a financial advisor, they will take a comprehensive look at your finances, including your student loans, income, expenses, and goals. It's like a scout. They're assessing the situation. They will then work with you to develop a plan to pay off your loans and reach your financial goals. It's like a guidebook. They're providing you with a plan. A financial advisor can also help you take advantage of various repayment options, such as income-driven repayment plans or loan forgiveness programs. It's like a Sherpa. They know the ins and outs of the loan repayment process. Additionally, they can help you create a budget and invest in ways that can help you reach your financial goals. It's like a Sherpa. They're helping you navigate the terrain and reach the summit.